Hello and welcome to the channel. In this video, we are going to take a look at the foreign exchange. We will review dollar index, EURUSD, GBPUSD, and Australian dollar. Before we move forward, a disclaimer: this video is for educational purposes only, and it is not a financial advice. Okay, so if you have been following our channel and the previous videos we did on Forex, we had been talking about the dollar index to perhaps reach this region of around 95 and possibly even lower to anywhere between 95 to 94.5. What the dollar index had been actually doing all this time for past 1 month is actually nothing more than a range. So what we can do is we can draw a range like this, and it appears that it's in some sort of a distribution, which is quite likely because of the fact that we had the D point here, and it was also the 1.618 projection here. So if you want to really find out what are these levels I'm talking about, please have a look in the video library, and you'll be able to find a previous video where I went through this in depth. Okay, so this is what we are kind of expecting, and it is possible that if it breaks out of this range, we could see it actually reach to the point we were anticipating it to reach, which is between 95 to 94 and a half, around here. What we also see is that actually we see one point here where the dollar index made an attempt to move lower. However, the buying came in, then it went right to the top, and it wasn't able to take the top either. And now it's kind of coming down again. So it's in a trading range. And look at the time period; it's been there since November 24th. And where are we now? We are in January, so it's been more than a month now, so more than 8 weeks. Okay, so the next one we will take a look at is the Euro USD. So Euro USD is pretty much the mirror image of dollar index, because about I believe it's a 52% or 53% composition in dollar index is actually Euro USD. So here what we also see is actually a range. So this is what we see, that your USD has been in this range. And what we see is that over here, if you look at our previous videos, we had come up with a shorter time target of 38.2% retracement level, where possible resistance was going to take place. So the price actually rallied up to right here, then it sold off. Then it's been in a trading range, then it tried to break out of it one more time. It couldn't do that. Big fall on 3rd of Jan. So then that's the actually first day of the trading day of the new year, and now it has retraced back to, if we draw it from here, pretty much to the 61.8 retracement level, and from here, which is another significant low, it's around 61 point. So yeah, roughly around, it just missed it by here's with 1.1273. Yeah, about 10 pips. It missed it by about 10 pips, and now it seems to be moving higher. And this is the FOMC day, so last Friday. Okay, so this is what we are watching, and it is possible now that if it is able to finally break out of it, it could actually trigger more buying, because it'll be like the one, two, third time, and if it sustains breakout, then what we are looking at is the price reaching up to this 38.2% retracement level at 1.1460 as the possible target. And one of the reasons is that, which we discussed in the previous video, is we draw this retracement from this ABCD, which brought us down here, and I believe it is it's not this one. It is, if we clone this one, I'll bring it up here. Yeah, so this one reaches pretty much around 1.1440, and the 38.2% retracement comes at 1.14610. So what we can perhaps say is that, you know, this is our 60 to 1.1440 possible target. Okay, so we'll just mention this here. This is what we are looking at. Okay, let's move on to the GBPUSD. So the GBPUSD one is actually quite interesting, and we'll talk a little bit more about this one. So what we can see is that actually it has been selling off for quite some time. Since the 2nd June 2021, so for about 6 months it made like a double top here. So February 23rd February 2021 last year, and then an attempt was made to take this out, but went through a lot of distribution, and it's just been coming down and down and down. In fact, the retracement levels are pretty interesting. So there you see that's the 61.8 retracement. Let me actually point it like this. This one is what yeah, this is the 78.6% retracement here, and this one is, I think, a bit more. Oh wow, it's also the 78.6% retracement. So you see how this pair is moving. It's just following the ratios really well. And where are we now? So we are, let me just blow this up a little bit. So we are trading right at the 61.8% retracement level here. So in fact, yeah, I've tried to join this, but it's drawn from this top right here. And what we see is that actually on the 5th of Jan, it tried to rally above it, but selling happened, and it actually closed lower, but still a bullish candle. The next day was a bearish candle. And then on Friday, as we saw the EURUSD rally as well, and the dollar index moved lower, this moved higher and is challenging these highs again. What is also to be noted here is that this is the 20-day period moving average. So on a shorter term momentum basis, actually it's a bullish momentum. A lot of shorter term traders look at the 20-day moving average. On the longer term, this is the 200-day moving average. The price is below 200-day moving average. So the selling pressure persists actually. So what you can see is that ever since price moved below this, it's just been lower price here. So we are watching this to see what it is likely to do. It is possible that actually this pair makes an attempt to rally higher to 1.3690, 1.37, touch perhaps this 200-day moving average on daily time frame. It's possible that it might do that just because of the weakness in dollar index, which we had a look at earlier on. However, there is something also very interesting about this currency pair, which we'll talk about taking a look at the weekly chart. So it's possible that perhaps it might retrace down. However, when we look at it on a weekly base, what we see here is actually this currency pair has done something very interesting. So this is the low which was formed in March of 2020. And obviously we see that the currency pair has moved higher a fair amount, and it took this swing high out. In fact, it challenged these highs formed in 2018. And let me actually quickly see whether there is also an ABC pattern here. We'll just quickly take this, clone this, and now that's much higher actually. So yeah, that's quite interesting. So it means the longer term cycles perhaps could be fairly positive for this. We'll have to see looking at the price action. So what we see is that actually it has been pulling, and it pulled right to the 38.2% retracement level. So that's drawn from here to here. Let me draw it again, here to here. So that's the 38.2% retracement level of this entire move here. What is also interesting is that the 200-day weekly average, so 200-day weekly average, which is in this black line, also coincided with the 38.2% retracement level. And what we have seen over the last 3 weeks, in fact more than 3 weeks, or last 5 weeks, we saw on 6th of December 2021 week that actually it found support, and we had like a small body candle which closed positive. The next week is again, sellers could not take it below, and although the candle is slightly negative, there is really no decision, and that's what we see here, which we see a doji formation. So I'll just write doji, which usually means sellers and buyers are fighting, and there's just no clear winner. And the next candle is actually fairly large. It's got a large body, so a lot of buyers, and it's green, close green, and the body is in the first 2/3 of the entire length of the candle. Also, it's a variation of the bullish engulfing candle type. So this whole entire bullish candle is actually engulfing the body of this bearish candle. And then of course we had a follow through, and then the next week also a follow through. Perhaps it can pull back. If it were to pull back, which probably it is possible, but we'll have to keep on watching. Perhaps it could pull back, we to about 61.8% retracement level, around 133.30. But looking at the daily shorter term time frames, it might actually be kind of with a buying bias because of the 38.2% retracement level and the 200-day weekly average coming through. So this is what we are watching on this currency pair on the weekly time frame. And let me go back to daily, and finally we'll take a look at the Australian dollar. Okay, so the Australian dollar actually has been selling off a fair amount, and what it has done recently it has rallied, and it's gone up to pretty much the 50% retracement level around here. So above the 38.2%, below 61.8, so around 50%, and then it pulled back, and it pulled back right to the 61.8 retracement level. It missed the 78 by about 10 pips. And what we also see is that this candle here, it touched the 61.8% retracement of this move around here, and then it moved like this, then it moved like this, and then it moved this one like this. So if we were to just trying to connect all of this, it's it closed above this trend line as well. So it's not perfectly drawn trend line, and we can move it a little bit, but it closed above 61.8% retracement level. So what is possible is that actually the price kind of moves in this channel, and it could perhaps reach the 61.8% retracement level here. From a momentum perspective, it's still below the 20-day simple moving average. Going higher will obviously be shorter term wise positive, but it remains below the 200-day moving average. So that's what we have to watch, which is kind of capping its price. Look, it touched, and there was a big sell-off here. So the possibility remains to reach around 61.8% retracement level. This is what we're kind of expecting because of the analysis which we did on dollar index. We'll have a very quick look at the gold. So if you remember, we were talking about that gold had a good seasonal before the Christmas break, and it was likely to move higher, which it did. And then what we have seen is it has retraced, and it has retraced in an ABCD manner. So what we see is it's actually more than the 1-to-1. It's probably around 1.618. We can have a look at the 240-day moving as 240 minute chart. But before that, what we see is actually gold. So gold actually, moved lower, and then it touched the 61.8% retracement at 1783, and then it closed higher. So there is a possibility that what we have here is the support zone. Between these two levels. So yeah, maybe gold could perhaps make another attempt lower and reach to around 70 level, which is the 78.6% retracement, and that would be a point of interest to take a look at the gold from the long side. So here, yeah, what it has done is basically we see this. Okay, yeah. So yeah, this is the 1.272. Let me actually take a look at the expansion of this. So a number of things coming together. So this is the main reason is the 61.8% retracement level of this move from here to here. Gold found support. Okay, so this is what we are looking at. I hope you enjoy our videos, you find them useful, and if you like the kind of analysis which we do for various kind of instruments, stocks, forex, gold, then please do subscribe to the channel, and do not forget to hit the bell icons. This way you will be aware of when the next video will become available. Thank you very much for watching the video. Have a great day and night, evening, wherever you are, and good luck and good trading.